And we are live. What's going on, everyone? This is Jordan with Conquer Trading and Investing. I hope you all doing well. We're going to talk, obviously, about Bitcoin here. Approximately 200 days to the halving. We're going to look at whether or not Bitcoin is currently on time, what our expectations are. We're going to be looking specifically at the stock market. We're going to do it all together right now. Now, you could check over here. This is a nice hash. They have 176 days to the Bitcoin halving. CoinMarketCap has 197 days. Obviously, it's depending on blocks, not days. 210,000 blocks. Every 210,000 blocks is the halving of the miner's reward. Current expectations are going to be variable, but as we get closer to it, we'll likely be able to lock it down to a date. 197 days until the block subsidiary gets cut in half from 6.25 Bitcoin to 3.125 Bitcoin. At the Genesis block, Bitcoin had an inflation rate of infinity. After the 2024 halving, the inflation rate will drop to less than 1%. That's less than gold coming out of the ground being mined per year. Bitcoin is the most immutable, scarce asset on earth. Let's take a look at what we have going on over here. There's some things on this chart that I want to bring to your attention that I want to take a look at. And we'll start off with the yellow lines. These yellow lines over here, they all have the same angle. This is coming off of the all-time high in November 2021 Bitcoin. And you'll notice right under it is a purple line. That purple line is the same angle as the yellow line. You can see that it's a little bit of an earlier confirmation that potentially the bull market is beginning as far as resistance, trendline resistance being nothing else overhead. The yellow line, though, you can see the one touch off of the top line in this cycle over here coming from 2014. And you could see that once it broke out, that retest and resumed up. Here we got, this was live over here, CTM, back in the summer of 2020, live on a public stream, much like we are here today, calling the bull market breakout. And you can see currently we're under the purple line right now. Our expectations coming into the end of this, or to the end of the year, January, that likely we're going to be somewhere within this range. Now, this was put in, though, I have to tell you, if you just rewind, I don't know whether it was weeks ago, there were, maybe several weeks ago, there were lots of expectations that Bitcoin was going to hit a new all-time high in 2023. So we had to take a look at that. We want to look at everything. We tried to stay on the right side of the market and do it without bias. So if people out there are putting out expectations of a new all-time high in 2023, we wanted to understand why. And to make a long story short, we kind of came to the conclusion, unless we were to see some type of like massive pivot in policy from central banks, including the Federal Reserve, that it was highly unlikely. Another thing we put out there that could potentially cause that would be if China were to go ahead and launch a massive stimulus bazooka. By the way, there's chatter out there that next month, China may be looking for somewhere in the neighborhood of about $137 billion stimulus package. We are going to look at that later in this session. That's something, right? That's not big enough that's going to cause Bitcoin to come to new all-time highs, but it could be quite accommodative for Bitcoin and risk worldwide. We will look at that. We'll look at whether or not that's actually something actionable, whether or not that is, we're all familiar with verbal tightening. Is that verbal easing? It could be. They're not, usually when central banks act, they act without warning. They're giving a warning here. Nevertheless, another thing that could have caused Bitcoin to snag a new all-time high potentially could have been if a spot ETF was approved and there were actually funds flowing into them. That could have done it. Neither one of those things is expected to happen by the end of the year. Now, there are expectations that as we enter 2024, a spot ETF could be approved. And if a spot ETF is approved and there are funds flowing into it, you know, who knows what happens next? So we're going to be aware of everything. We're not just coming up with, we take the market every day. The market is like this living, breathing organism, and we take everything in as best we can, and we try to navigate. Now, one thing we might have to navigate as we go forward, though, is Bitcoin has never experienced the business cycle, right? But Bitcoin launched, ever since Bitcoin launched coming out of the crisis of 2008, it has been a Fed cycle. They have not allowed the business cycle to take place. Bitcoin has never been through a recession. There was a technical recession after the global lockdowns, April 2020, but that was on the back of a massive bazooka, Jerome Powell and the Federal Reserve flooding the system with liquidity. Bitcoin has never been allowed to experience a full-blown on recession, and we don't know how it will act. Again, it's not black and white. There are a lot of moving pieces. What happens if the US is going through a recession, but China is actually moved on to full-blown easing, right? So again, by the way, expectations are not expectations. If you looked at these past cycles, you could say that at the time of the halving, do you see where price is? Isn't it funny? I mean, it's a coincidence. I don't know that this time is going to be the same, but price is right around exactly where that yellow trend line is. And, I remember we put out, this is going back, it's on TradingView, somewhere in late 2022, expectations of potentially where price will be at the time of the halving, somewhere right around here, somewhere between $33,000, $35,000. It looks like that's on the table, but everything's on the table. We're going to look a lot further in this session here together. Let's start off with this line. When we get into Bitcoin later in the session, I want you to focus on this line that I'm highlighting for you right now, because I call this the bull market invalidation trend line. And as long as price stays above it, and I feel like that we should be looking at where we're wrong. When I say where we're wrong, coming back into December 2022, why everyone and the sentiment was really dark. Really, we were talking about our expectations for the bull market breakout and then watching it as it occurred, 17,250, the previous cycle ceiling. So now we want to know where we're wrong. And this trend line would be a technical breakdown if that were to occur. Why that does not mean that if that happens, price goes straight down and tests somewhere in the neighborhood of what is so far the bear market low. It's on the table, and there would be a high probability of that happening as long as this holds. A lot more of the same is happening, but we will look at that line going forward. I want you just to see a couple of instances of why that line and how that line is currently showing the symmetry of the market. And if you're looking yourself, right, you can see over here support, resistance throughout. And you could see over here like where this line was holding resistance, support, and you could see it throughout over here, right? So I find it fascinating. Look at this support, resistance. I find it resistance, support, didn't hold, boom. Look at this breakdown, retest of the resistance. I find it look at that again over here. You could see that resistance. For whatever reason, look over here, the line that we're currently on. What happens if we were to break down? Would you think if we were to break down, there's a good potential that we come out and test this line over here? This is the channel that we're currently in. We have been since March in this tight range over here. Now, the good news is that tight ranges, consolidations like this, they beget volatility. When we do break out, and whether that is to the upside, and of course I hope it is, and if we do break out to the upside and we're clearing above 32,500, I think we see a quick move into 37,500, 40,000 in that neighborhood, and that is going to be lovely. But at the same time, if we break down, we have to also watch where technical breakdowns occur. We have to be aware of both sides. And you could see from this perspective, if we were to break down outside of the bull market breakout, invalidate it. And that doesn't mean that we go down. That could just be an accumulation pocket. We have to take it as it comes. But you could see that potentially that's a confluence of support. Breaking down from there might not be the best deal. Check this out over here. This is just to see that thus far, Bitcoin is a lot on time. Off of the cycle high, 200 days to the halving, Bitcoin in 2015 was 65% off that high. In 2019, 60% off that high. And currently right now, 60% off that high. You could see right now that Bitcoin currently is doing nothing but Bitcoin things. We will see. And listen, we're here to do our best during these unprecedented times to stay on the right side. And no one has a crystal ball. No one knows where that's going to be. Watching over here, we continue to track throughout this cycle that throughout the bear market, we continue to see active addresses on the rise during the bear market. And we continue to see hash rate, which happens to be at a new all-time high. I imagine sometime around the halving, as the miner's reward is cut in half, we do see the hash rate probably come down significantly as a lot of miners are just no longer able to keep up and stay on the network and do it in a profitable fashion. But I also imagine that continues to recover. All right, let's bring it into what is next over here. And we're going to start, before we get into Bitcoin, look at some positioning. Let's take a look at what's going on now here on the stock market. This morning, we were watching right over here as price was coming into this resistance. I'm going to jump down to a small time frame. Notice, though, we have above us, right? We have a one-touch trend line. Why do you do one-touch trend lines? Because the market pays attention to the structure of the market. We were looking together at what the structure of the market since January 2023 has been for Bitcoin, one of those angles, right? And for whatever reason, one-touch trend lines happen all the time. You can see that we are into another area of resistance, but I want to show you what happened this morning. Let me come down to a 3-minute time frame. And as we were testing that resistance here this morning, right? Sometimes it only takes, trading is extraordinarily complicated. It takes, to be successful, it takes a massive dedication, effort. It better be a passion, and it better not just be a passion where it's a hobby. You have to take it extremely serious. You have to work really hard. I like to give the analogy of what it takes to perform on the level of an elite athlete. If you notice, it's not those that are most talented that are the most successful. It's those that are talented and work the hardest. That's what it takes in trading as well. Andrew, great to be here with you. Thanks for God bless you too. That's the most important thing that I read over here. God bless you too. Viable correction over the next 6 to 8 months. Andrew, do you bring up something that I just want to put a warning out there before we'll go into this in 1 second and we'll come back to it. But I want to put out a warning, right? One-touch trend lines. Look over here. Wait, let me jump back down over here. This was a one-touch trend line. So what's kind of neat about this, because I want to talk about my one warning. Andrew, you inspire me here because I hope that we have a buyable correction. And not only that, look, if we break out over here to the upside, I think that puts in a really nice and big move. And that's sweet. If we come down, further pressure, that we seem to be seeing some pressure. We're going to get further into that throughout this session. But look, if we come down towards this area of support and hold and only come up back towards this area over here, the top of this channel, that offers nice opportunity. There's always opportunity. There's always opportunity out there. And the markets are always going to be there. All right, I want to give a warning though. But first, I just want to show you over here. I like to view this chart using the closing prices over here. And you could see if I look at this chart on the closing prices, you could see these 3 touches over here. What's really neat is when I go to the daily, so you can see the wicks, you could see, look at, isn't that amazing? The same angle, like when I say same angle, do you see how that's the same angle as those closes? Now look at this off of the wicks. Do you see those 3 touches into that? Why does the market do that? I don't have the answer to why the market does that, but I know that the market does that, and I know that each asset has its own individual structure that for whatever reason it's always looking at and holding. So when you're looking at this over here, and let me bring this down, you could say that, well, people are looking this and they could see that price came up over here, but that's one touch. So this is the resistance, and this was resistance. If I borrow this trend line over here, you can see that it's the same angle, right? And that's how people would look at it. But what I did is I added a one touch trend line over here off the top. And look at that trend line. We've had this well before we made the move up over here to touch it. You came into, we broke above, and then we came up. You could see that price was then hugging that trend line. And look after it broke down. Do you see how it hit it again as resistance twice? Isn't that neat? And the only reason I share is because we're just trying to figure this all out. And all these magical lines, they're really helpful in helping you have the awareness you need to navigate these markets. But I do want to throw out some caution and why I do believe that if we were to break down, when I say break down, the bull market invalidation, that it could open up a nice accumulation opportunity. It very well could. I do believe that. I don't think that would mean that price then is coming straight down. And by the way, there's mega horizontal resistance in this area just above 1800. Likely, if that were to happen, price would find its base and hold down there. If it didn't, and we tested the lows, I mean, is that open? Like I said, Bitcoin has never been through the business cycle. And if we are headed towards a slowdown, towards a recession, which looks highly likely. By the way, Fed right now is messaging, as we said after the August meeting, they're going to pause in September. And likely, we don't know for sure. We have no idea. That's likely the last hike of the cycle. We don't know. And that continues to be variable. Unprecedented times. You saw lots of verbal tightening potentially coming out of JP Diamond. No, rates are going towards 7%. Maybe they are, maybe they're not. There's lots of variables, and that chessboard just moved a lot over the weekend as we saw world events continue to spiral. So what the repercussions from that will be as we move forward, we'll continue to track it all. We don't know. But what we don't know is how Bitcoin would react if indeed a full business cycle were allowed to play out. And I don't think it would be favorable, except I don't know that there won't be intervention. I don't know if that intervention is coming from the US Treasury. By the way, their buyback program is scheduled to begin in 2024. Does that turn into yield control curve? I don't know. If you were watching, we were calling over here on this Friday after the jobs report. We were calling the peak in the 10-year coming from a group that was able to, right, on the breakout of this descending channel from what I saw, before many macro analysts were even aware that yields were basically getting out of control. We were talking about what could happen, and staying on the right side is not always easy. We went from breakout to sell impulse, getting out of that trade to back in that trade, but we're able to hold that trade all the way till Friday. That's a massive trade. And the reason I'm pointing out two different things here today with you, as far as trading and discretionary trading, I'm going to be pointing out something that is intraday day trading, and I'm pointing out a position trade. It's not about how many trades you trade, how often you trade. It's about finding the right trade and also understanding that it only takes a few good trades throughout the course of the year to absolutely do legendary things. This was one of them. And it seems that not only was our exit, which was extremely unconventional for myself and CTM, not waiting for, you can see right now today, price is coming into this double black diamond. You could see that's an area of support. If price closes it, that's normally our exit. But this was extenuating circumstances because of the price action around the jobs report, yada, yada, yada. It's just how we read the market. Had no idea that we would see, obviously, war breakout. And I imagine that we are seeing a flight into safety. Jordan, how could we be seeing a flight into safety today when NASDAQ is and S&P are both blurring in the green, up 1%? I don't know. I don't know, right? And markets are, let me tell you something about them. If you think you know, you're about to learn. Right? They're very difficult. And all we could do is make sense of what we know, make observations, and continue to put the puzzle together. I could say that, well, Bitcoin and crypto today, again in the red, they're not showing signs of risk on. Is U.S. equities being deemed as, right now in the world, a flight to safety? I don't know. That would line up with dollar milkshake theory, right? But dollar's not bid today. And speaking of the dollar, but before we do, right now, everyone this morning talking about treasuries. Again, great read on the market by us, getting ahead of that. But it's not that easy. U.S. Treasury is at it again, announcing another massive announcement over here, another $170 billion. We've been tracking this throughout since the summer as they're looking to raise $1.85 trillion. We also thought that this money would be coming from the reverse repo. It continues to be coming from the reverse repo. That puts us towards expectations that at the end of the year, and we're getting close. We're in the middle of October now. Middle of October, though, is usually when seasonality kicks in. Is that what we're looking at today on the NASDAQ and on the equities? I don't know. I'm watching to see if we get some type of further breakout, technical breakout on the NASDAQ, or if we are entering into distribution. Now, normally, this is a place where you see the VIX come off over here. Volatility is almost just like an easy situation here for equities as seasonality kicks in and they come up into the end of the month. But I don't know. Seems like that in many ways this year is a lot different, including the first half of the year saw NASDAQ making 20% plus gains. Normally when it does that, the second half of the year is about flat, up roughly 5%. So which type of, are we going to see seasonalities kick in? Are we seeing a flight to safety? Will equities continue to blur green, or are we going to see a correction in that? I don't know. Paul Tudor Jones this morning on CNBC. Paul Tudor Jones is great. I remember after the Fed meeting, this is December 2018. It wound up being their last rate hike of that cycle. I remember that next day he got on CNBC and he said they just made a policy mistake. That will be the last hike of the season. He was dead on. Now, like most investors, he's right about some things and wrong about others. And it's not about how often you are right. It's about when you are right, allocating the right amount of capital towards it and taking advantage and pushing that trade. And it's a matter of cutting your losers short. A lot of people knew in the markets, they really do not really focus on that. They just look for right or wrong. But bottom line, Paul is out there saying today that he does not think equities is a good place to be, not under this geopolitical situation, not with the government's debt situation. He is looking at Bitcoin and gold as favorable. Let's just give this here 1 minute, and then we'll continue on with our view.
We're all gone anyway, so you don't worry about it. But now they're actually something that are on your radar. Well, so is a pandemic, which was on your radar in Davos before anyone knew the word.
I would say the fiscal situation is very different from other cataclysmic events that we've suffered as a country. It's not Pearl Harbor. It's not 9/11. It's not COVID, where we did not see them coming. They were external shocks. The fiscal situation we have is one that's really clear, and there are obvious remedies for it, and it's something that we're going to have to deal with. It's not part of the political dialogue yet, really. I don't think so.
Entitlements again.
Well, it's a variety of things.
But mostly.
If you just think about what's happened since really in the last 3 or 4 months, we're getting ready. I don't know if we'll have a Minsky moment in the bond market. I don't know if we'll have that point of recognition, but we're going to have the grinding reality that with 122% of debt to GDP, as interest costs go up to the United States, you get in this vicious circle where higher interest rates cause higher funding costs, cause higher debt issuance, which cause further bond liquidation, which cause higher rates, which put us in an untenable fiscal position.
I mean, he's really focusing in on what is the real problem ahead. If you knew, last week we hit $33 trillion in the US current debt, and then a week later, another $500 billion tacked on. When we look at what could potentially be the top over here of the 10-year of yields, it was just a place to take profit. It's not to say that we're not going to find some type of resumption up. We'll be tracking this and watching this further. A real confirmation would be breaking this green line down over here, though. If we were to break down, then I would expect that we are seeing some type of flight into the safety of the bonds. That's not happening today at all. That brought up a few different thoughts. I feel like almost having to watch that again so I could gather them and bring them to your attention, but I'll continue on. All right. We're like often. Oh, this is what I wanted to talk about. All right. And then I'll come back to this. So I saw it, right? 80% of long-term holders right now, Bitcoin hasn't moved in 1 year. Is that right? Cloud Casino, what is it? Is it in the last year, 80% of Bitcoin hasn't moved? So, I mean, my thoughts on that are simple. And if you go to look into Bitcoin, and let me see, there's some good charts over here. One that I like is the 1 year HODL, right? Let me just pull this up. What's interesting about this is that at bottoms, all right, so I'm going to find a bottom over here, because right now it's been very easy to hold for a year or longer. What do I mean by that? Well, Bitcoin over here for we're in October 2023. We could come back to October of 2022 if I could find it, right? And from here to here, Bitcoin this has been easy street. There's nothing hard about hodling as price is moving up, right? And the other thing is that in a recession, you know what? The reason that Bitcoin, I mean, look, Bitcoin is so highly liquid, and if you need money because you have to pay your electricity bill or food, as much as you would like to continue to hodl Bitcoin, unfortunately, it's a situation where people could be forced sellers. So now there's a bunch of people out there who, don't have to worry about it, but there's an enormous army out there of people who are trying to get ahead. They're trying to save, and they're trying to have their savings be able to appreciate first that devaluing dollar. Unfortunately, if we enter into some type of prolonged recession, people need to rely on their savings and dig into their savings in order just to get through. So I don't think it's black and white. And also a lot at these bottoms over here, I'm pointing out to the 2018 bottom. I don't know if I could highlight this over here. You could see that a lot of these hodlers had to sell. It's forced selling. And hold on one second. I want to show you at other ones and what they look like over here. And did we see a big bottom crash over there? No, not really. Did we see in the June the 3 commas, the Celsius breakdown over here in the summer of 2022? we did. There were a lot of for sellers. Less during the whole FTX bottom over here, but you could see over here during the banking crisis as well. A lot of people sold. I expect that if we ran into any type of situation that was, whether you call it a flush out or whatever, that you would see a lot of these 1 year plus hodlers selling. And that's a good thing. That often marks bottoms. However, just be aware, if we were to enter into a recession and that recession was allowed to play out without intervention, and I doubt it. Don't forget, in March 2024, we're seeing those regional bank loans, they're up. What's going to happen? You know? And we have a whole host of other things, right? Including the stimulus could come from China. It's very complicated. We'll take it as it comes. But I'm saying if we're allowed to see the business cycle play out for whatever reasons, that's what they want. It might not just be one more flush out like this. It could be something, if you're all familiar of the price action coming out of the dot-com bubble bust, it was down, 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 down for 2 years. Now, 2008 seemed a little bit easier with one big down and then back up. It's not easy. No one can say what is going to happen, and we're just going to do our best to navigate it as it comes. What I wanted to bring to your attention was over here after breaking this morning outside of this resistance. Price was into the resistance. As price is into the resistance, you watch how it's going to react. Are you going to see some type of resistance and then price selling off? Or does it break above? In this case, it broke above. You could see a quick and clean move above. Price came in, it retested that breakout and then was off. This one trade here is all you need to have a beautiful day. It requires patience. It requires lining it up ahead of time and then being there to capitalize. So what else are we looking at here today? Let's take a look at what's going on with Bitcoin. Before we do, I want to make sure that we're aware of what's going on as Bloomberg is reporting. For whatever reason, this is all off. I know where we are. I'll be able to highlight it in real time with you. Bloomberg is reporting that people familiar with the matter, back channels through China, and what they're doing here is announcing that, listen, my own interpretation of this going back several weeks was that China was not going to launch a massive bazooka, but they would be there to put out fires as they arose, loosening credit, and they've continued to do that. And then today, I think what they're trying to do is just reassure the market that, listen, we're going to be there, we're going to be accommodative, and that could change. So if China's forced to, and if at any time they do come in with a large package, for me, that's a game changer. I'm here not to have an opinion, but to view the market without bias so I could stay on the right side. So, but right now what they're talking about is that they're set to announce a new wave of stimulus, expand the budget deficit above the 3% cap set in March. And what they're looking at is at least 1 trillion won, $137 billion of additional sovereign debt for spending on infrastructure such as water, blah, 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 blah. So that's something for us to keep an eye on. I don't know whether or not it's basically verbal easing, letting everyone know we're going to be there, and I imagine they are going to be there as needed, but instead of acting, they're just giving that verbal cue to the market. So we'll continue to watch. And I do think that the only reason Bitcoin is hanging in where it is because of how accommodative that they have been over the last, let's say, a couple of months. Anyway, we have tomorrow FOMC meeting minutes. I don't know how relevant that is compared to the Fed speakers this week talking about likely trying to message that they are done on rate hikes. And I don't know if that's the case either. Again, this is a very variable market. We'll continue watching it. Words cuts were also mentioned. They said that they don't think that they're going to need to cut in 2024. Oh, yes, they will. But either which way, we also have PPI. And then later on Thursday, we have CPI. I don't think either one of those are going to be of any surprises, but we continue to watch the job market, including unemployment claims. Right now, the market is pricing in a pause going through December with a 74% chance. I don't know what happens in November CPI, not this CPI reading, but next month as we look forward to, when is that, the 13th? The 14th of November. This reading should come in high month over month. I don't know how that fits into the puzzle yet, what the market's reaction is going to be. And soon, year over year, is going to be showing upticks again. We have to look at oil before we move forward. So we can see that oil over here is, all right, lots of flip-flop in here. Our expectations, though, after the breakdown was that we would be looking at some sideways price action. That might change now that the developing situation is taking place. You could see that price has regained and is holding and testing the support over here at 85.5. A resumption up. I'm looking for a trend line. I'm trying to spot the structure of the market and why I don't see it. I'm going to go like this first, and then I'm going to just go ahead and see. Like, do you see that's support and resistance? So I don't know that is. So it's probably a lot easier. A close above 86 and a half over here, the highs over here. That would be that we're signaling a successful break back above, a hold, and then a move up. Do we have traders caught on the wrong side over here on the gap? I don't know. From my understanding, most traders off of this sell-off over here were quite bullish, but not through I think they were looking at options to take advantage of that. We'll find out and we'll take a look at it. Let's move over. Let's take a look at what's going on here with Bitcoin. By the way, before we do, I just need to see what's going on from the bigger picture here. So this is, for me, the important, this resistance over here. Price is trading above that resistance. Obviously, you want to see a close above that today on the daily. If you don't, that could be a liquidity grab. That could be distribution. I thought I mentioned distribution this morning. I said I wanted to see if it was distribution. But anyway, come back over to here. If we do find that this area is holding as resistance, get back above, that would be what looks like a reversal into resistance. The close above or below is really what's important. We'll continue to watch that as we move forward. All right, let's take a look at what's going on here with the Bitcoin and our current positioning over here. Obviously, short Ethereum and short Cardano. Bitcoin out of the market. Bitcoin over here, right, is we saw the breakout above the purple line. We tried taking a trade over here, small profit, 1% or so. And then over here, small loss, letting go of the trade very quickly. We're just out of the market waiting. You can see that price is currently in this area of support, right? Back into May and then June, this was an area of resistance, right? Resistance again, now holding as support. If we break down from this trend line, then it looks like we're coming into a retest of the purple line, the trend line breakout. And you could also see that support in that area. So we got a decent confluence of support coming into about 26,200. Below that, then likely we're testing what is a very important line right over here. And you can see this is the SEC. The move into this area was SEC litigation versus Coinbase and Binance. And then this is where BlackRock announced the application for the spot ETF. We've tested that line once below 24,700. That would likely bring in a test of what we call the bull market breakout invalidation trend line. That would be a big deal. So we're neutral, and rightfully so. It looks to be that we're neutral over here. I would like to just take a look at, as we're talking about trend lines this morning, clone this trend line over here and put it up off of the top. And how funny. But you could see that this is what we would want to see any opportunity of a resumption up and continuation. right now, this morning, Bitcoin is under pressure. We are seeing that bid into bonds. Oil looks like it is why it's unchanged. I can't figure out, and I don't know. So if anyone has any insight over here, let's also talk about it. It's the dollar, and I have a chart. Huh. I don't have my chart. That's interesting. This is not the chart we're going off of, but look where price found that resistance up over there. On Friday, as the 10-year was called for looking for a potential sell impulse, I did the same on the dollar. Unfortunately, I don't have my chart that I wanted to share with you up today, so I can't do that. But you can see that also we are seeing a continuation of that sell impulse going. Now, because on that chart I had an area of support, right? And I think it's no, you could see us coming into support right now. Unfortunate, I don't have it, so I had it all set to go. I don't know what happened to it. Here we go. Here she is. So this is what I wanted to show you. We did also, like on the 10-year, we called this prematurely, calling what looked to be a play. And this is coming off of, right? We went very bearish on the breakdown over here together. And then that was invalidated, right? Why we could have done a much better job. And then seeing the retest of that support, that false breakdown, and the resumption up, this would have been a good trade. Didn't get it, missed it. Right? We were able, though, why most people were quite bearish on the dollar, to see this wedge breakout, retest, and resumption up. But for whatever reason, the price action off of Friday's jobs numbers, it looked like a reversal was in play. That continues to play out. A close below here today would also give nice confirmation to that. I have in this area over here highlighted the next line of support. So I am looking at whether or not that support is up here, right? Now that we've broken above it. And I think this is the area to watch price action into if we get into it. So that's why I'm highlighting that today with you. If we get a move into here, we need to watch what happens next. Whether or not price is able to find support and resume up. Are we in this range over here? Or are we going to break through that support and head lower? That's what we will watching. You see, we're in a weird situation right now. If the dollar comes off, that should be supportive of higher oil prices, right? Oil being priced in dollars. Higher oil prices are going to lead to higher inflation. The Fed is trying to back off right now. And again, we caught the tone off of that press conference in the August meeting of Powell. Our belief was that credit was tight enough to do the jobs for them. It seems that what is the communication that's being put out there right now. I don't know. There's a lot of moving pieces here. We're just going to try our best to stay on the right side. So right now, after taking some unorthodox exits on the 10-year and the dollar, that looks like now we have to watch where we're wrong and where they resume back up. So it always takes lots of awareness and lots of work. Let's move back over here to look at what's going on in the Bitcoin. Ethereum's at a very important place over here, right? We're currently watching the short taking place on Ethereum. You could see that we wicked below the trendline breakout that occurred. So breakout, come in for a retest, still a retest, trading below it now, right? That could get dicey very quickly. That's all I'm going to say. I'm going to zoom out over here so you get a look at what's happening, right? If you remember back over here, we were calling that, a fall off the cliff was imminent. And people were like, no, that's an ascending triangle. That's bullish. Okay, it could be a bullish continuation pattern. This is an uptrend, right? This is a downtrend. Now, it depends on which way it breaks, though. And it's like something like 60% favorable to the upside, 40% to the downside. But it broke to the downside. You could see it wick down into this line, this purple line over here. That first purple line that you have over here, I'm going to zoom out. That's the June low, followed by the November test of it. you could see on the wick down, we came into that area. I then did what we do after we wick down below again. I did a one-touch trend line, right? That one-touch trend line, you could see support, support, and so far we've retested into that resistance. So we are seeing the first big technical breakdown, and this could be a second today. Closing below here is a major breakdown. Major breakdown could be occurring. I don't know. We'll just watch it. Mad Dog, lots of love. Glad to see you. Always bring a fantastic, positive vibe over here, and grateful for it. So this is what CTM positioning currently looks like. Again, it is Ethereum holding the short, Cardano holding short, and Bitcoin is neutral. Bitcoin is just as close to going long or short. And look at that. Look at this breakdown, breakout, as it should be, just as close to going either which way. So that's neat to look at it from that view. This is CTM experimental templates. This is taking CTM 2.0 potentially to the next level. You could see over here that in this case, Ethereum was able to enter sooner. Cardano about the same, and taking profit here on Solana's long yesterday. This is the view of those four. Instead of looking at it from the P&L perspective, but from the tradable aspect, you could see Solana, after taking that nice long, is getting ready to potentially here now attack the short side. And just like Bitcoin, it's just as close, if needed, to resume back to the upside. So just taking a look around and see what's going on. David, Phoenix Fire, these are the experimental buy-side only templates here for Bitcoin. I will, as soon as I get them into scripts, get them over for you to review for the buy-side boost. This is coming from 2016. The drawdowns on the buy side are absolutely phenomenal. It will take further reviewing, though, to find out which one of these is the most highly valued. I'm going to go ahead and print this and put this on my wall. If y'all remember, in January 2022, December 2021, I was talking about CTM. It's fine. It's time to work together and find out what type of alts we want to look to short against Bitcoin. I'm going to have this as a reminder for the next tightening cycle. This is like what I deem to be the right play at the type of the cycle. Got a little noisy out there. There's no question about that. Instead of the team working together, it was kind of not, but that has changed in March 14, 2022. CTM 2.0 launched. Now the hive mind is absolutely stronger than ever. That's our session for today. Let's take a look at that. I didn't see that. Head and shoulders you're looking at over here. So it could be, right? Left shoulder, you're looking at the head and the right shoulder. The most important thing is the red line, the neckline. And then if you look at a measured move, I'll just do it like, 48%. And then the breakdown over here. I mean, yeah, what did you put over there as a target? 1100. I mean, we're in the same area, but I do have over here that yellow line as the target zone. So let me just zoom out a little, and I want you to see the greater structure of the market. So this is a parallel channel from the 2018 high, February, coming into the May 2021 high, which was tagged again in November. And then you could see much the same way we looked at trend lines through the whole day. This provides the structure of the market. So there's support coming down, right? If we break clean, I mean, okay, there's for sure. Oh, I was looking at the horizontal support, and if you move your eyes over to the left of the chart, you could see it clean as day. Resistance, support, and then look over to the right, and the market was paying attention to it. So that coincides with this channel line over here. And then if that were to break, and I have that line, by the way, coming off of this touch over here, and then this touch over here. If that were to break, then this would be likely where we could find some support. Anyway, we'll take it as it comes. Thanks for hitting the like button. Thanks for being here. I hope you all have a beautiful day. If you enjoyed this session here together and you're not yet subscribed to the channel, go ahead and do that, or go ahead and share this video, tweet it out to someone. It's a good one. I think this is a voice that is good for the space and to be heard. Thank you for helping me work it all out and navigate these markets together. Have a beautiful day, everyone. God bless you. I'll talk to you soon.